All right, everybody, let's continue on this Robinhood Q3 earnings call.
The next question is going to come from Jeff John Roberts from Fortune.
Let's go, Jeff
Yes,
John
my question
Roberts.
is about tokenized equities, which
Uh-oh.
seem to be the future and they seem very cool. But
Uh-oh.
I'm curious, when do you think they're going to scale, Vlad? And also what implications they might have for Robinhood's revenue when it comes to payment for order flow or otherwise? Thank you.
Yeah, great to see you, by the way. I forgot to mention we have some folks from the media joining us today, too. So thanks for the question. So tokenized equities, as you might remember from the event in France, there's 3 phases to the rollout, and we're still in phase 1, but we're really ramping up the number of tokens available on the platform. So we're now up over 400 available. And I think that makes us the largest in terms of selection. I think the largest, maybe one of the largest at the very least. But I think where it really starts to get interesting is phase 2 and phase 3, which is them available for secondary trading on Bitstamp, and then
So
eventually
crypto.
them being on DeFi, where the possibilities really start to multiply. You start thinking about self-custody, collateralized lending and borrowing, which we think could be very, very disruptive as well. Currently, the model is just foreign exchange in the EU. We take a relatively low, simple foreign exchange fee for tokens, and actually, we're pretty happy with that. I think that's 10 basis points, if I'm not mistaken, which is actually slightly higher than what we would be foregoing with payment for order flow.
All right, the next question in the front row.
Thanks for taking the question. Vlad, this is for you. Anyone who's had the pleasure of being an investor or customer for the last many years, I think it's been an incredibly inspirational change in product execution base. I'm curious to understand from you guys, what have been the contributing factors there? How do you see that maintaining or increasing over the coming years? But really incredible job, and it's so fun to be a customer.
Well, thank you. Yeah, we appreciate that. I think that we've grown as a company, and I think it's easy to sort of like dismiss what happened during COVID as, we were sort of like too bloated and got too big and got away from us. But I think a lot of what we did actually was we built the foundation for the company subsequent to that. So
Agreed.
we brought great people into the company, and I think we realized, that we had to ask ourselves serious questions about what kind of culture we wanted, what we wanted to be. Did we want to ship fast? And I think that set the foundation both infrastructurally and from a people standpoint to the product velocity that you see now. So I think we obviously had to make some tough decisions, getting fit. I think this is sort of underreported. I think a lot of people don't like to talk about this, but we were pretty early to adopt AI and actually like drive that through the organization, particularly in the areas where we think there's maximum
In
impact.
what way?
Customer service and engineering, where we actually, I believe, are best in class in our industry. So you'll hear more about that at the AI event, but I think that there's not a lot said about that because we're not a foundation model company, but I think we're right up there leading the financial services industry with how we're deploying it at scale.
Two things that I'd add, which I think both relate to speed of decision making. We made the change to a general manager model, and I think having leaders over their specific business owning goals and driving against their milestones helped us move faster. The second piece was alignment on what our financial tenets were around kind of what the ROI and other financial guardrails are, and just getting a complete alignment across the teams that build and the teams that support on what those hurdles are and what those requirements are, allowed us to move even faster once there was alignment on that. So those are two aspects that I think help us move faster.
So, that is exactly why Jason is money. What he just put in there. He talked about the management aspect of the business as well. They talked about tokenized equities, and they think they have more crypto than pretty much anybody out there. Now, Coinbase is a direct competitor with that, but since they acquired Bitstamp in July or August, I don't know if they are now ahead of um, Coinbase or not. But these are pretty honest guys, in my opinion. So I don't know if they say they've got more. They've got more. But you can come to Robinhood for crypto. Is basically what he's saying. Don't even worry about it. If you want it, we got it. The AI deployment makes sense. Actually, it's funny because Vlad Tenev here in the middle, the CEO, he famously said at a conference just recently, 10 years ago, in order for a company to grow fast and um, have the business model that customers wanted and that they needed in order to achieve, they had to have a tech component to their business. They had to be framed as a tech company, and there had to be tech, right? Because that's where that was the paradigm shift, right? And he said 5 years from now, it'll be AI. You must have an AI component to your business. And businesses are already doing it now. So, that being the case, don't be left behind. But there's some good stuff came out of here. Let me keep it rolling.
All right. Yes, also in the front row.
Hi, thanks for taking my question. Cryptocurrency related products and revenue have been an important part of Robinhood's growth story.
That's
What
right.
are your thoughts on adopting Bitcoin or other digital assets as part of your corporate treasury strategy?
Shiv, what do you think about that one?
Yeah, you're going to be the CFO.
We spent a lot of time thinking about this. We like alignment with the community. We are a big player in crypto. We want to keep doing it. We like that our customers are engaged in it. What we always try to figure out is it the right thing for shareholders as well? If you put it on your balance sheet, it has the positives and that you're aligned with the community, but it does take up capital. Our shareholders can also go and buy Bitcoin directly on Robinhood, and so are we making that decision for them? And is it the best use of our capital? There's a lot of different things you're doing, from new products, for growth, investing in engineering. So we have this debate constantly, and I think the short answer is we're still thinking about it. There's pros and cons to both of it, and it's one that we're going to keep actively looking at.
Short, sweet, and to the point.
All right. Before
Bitcoin.
we move to the
I kind of, from what I took from that is that they don't want to bet it all on Bitcoin.
the virtual queue, are there any other questions from folks in person?
See, I'm flabbergasted.
All right.
All these people in
Now to
front
the
of
dial-in
them,
community.
and they
All
don't
right,
have
so,
anything
for
to
those who are
say.
dialing in, please press star 11 on your phone to enter the queue. And if you'd like to remove yourself from the queue, please press star 11 again. So the first question,
Man, I'd have so many questions for these guys that it'd make your head spin. It's one thing to have come to a conference like this and just don't come there being starstruck. Just, oh my God, I'm at the Robinhood earnings call. Have a question. Have a question. And honestly, maybe not all of them are investors. I don't know. I guess you could go there if you're not an investor, if you're curious about the company, but look it up ahead of time. Look it up ahead of time. Like, they have previous earning calls you can go back and view. To me, it just makes no sense. Like, have something for them. Like, those questions that they ask us to ask, if you are an investor, you can look at all the questions that they're going to answer. Look at what didn't get answered and bring those questions. To me, it's just like, I don't know. If they were only going to answer the top 3, bring the next 5,
is from James Yarrow at Goldman Sachs.
Okay.
right, we don't have James at the moment, so we'll go to the next question. And James, jump back in if you can hear us. All right, so the next question is from Ben Budish at Barclays.
Barclays? Is that what he said? Barclays? They're a bank. Travel cards. I had a Barclays card. Fantastic travel card. All right. Same thing with him. What are we doing, folks? Jason's grayer than I remember.
All right.
And I wonder if
in the
it's because he
meantime,
has
while
the
we work
beard.
to connect with our virtual community. Alex Margraf, do you have another question?
I had a beard and he didn't. Now he has a beard and I don't. That's
All right, let's get Alex
that's
on the mic.
insane to me. Y'all don't have a question for these guys? Hey, my God, man. Y'all are invested in their company.
Shiv, do you want to share any more about yourself while we're waiting?
I think we're getting Alex the mic, so we're in good shape.
Yeah. Thanks for your patience as we work through.
Thanks.
Man. All right, let me see something here. All right, so you see this right here? This says the earnings calls, 2 questions got answered, right? Q3 questions, right? So they ask about the AWS outage. That is true. And how quickly do you expect Robinhood rollout banking? I would have asked him more on that, like if he has more specifics, right? That's what I would have asked, right? Because I really want to get into the specifics of this. But there were a lot more questions on here before. I guess they took them down, but come on, people.
Vlad, you mentioned the wealth transfer in your prepared remarks, and I'd just be curious to get your thoughts as to, in that sort of longer arc opportunity, where we are today, and then Jason or Shiv, maybe just thinking about the contribution to growth. Again, sort of a longer term question, but when we think about the contribution to growth from the wealth transfer, how should we sort of think about that over a 5-10 year arc?
Yeah, maybe I'll start with some of the things we're thinking about on the product side. We've been really thinking about how to make Robinhood more useful for you the more of your family is on it. So
Let's go.
And you see this with credit card and now the banking offering. Like the product is really a family product. Family is a first class experience. You can get, your partner a credit card or a bank account, make it really easy to create accounts for children and other household staff as well. And a lot of people have been using it as like a family financial hub. And I think you should expect that to be broader and deeper across the entire ecosystem. You guys might probably recognize, even though we've added a bunch of account types to the product, a few years ago, Robinhood just used to be a single individual brokerage account. We didn't even have retirement accounts. Now you have retirement accounts. You can have recently launched up to 10 custom individual brokerage accounts, which people have been really loving. But we still have a ways to go. We don't have trusts. We don't have custodial.
Ooh, but you will.
But we think that's an opportunity to continue to both get people when they're younger, but also, when customers get wealthier, they tend to start diversifying, putting things into trust. So we see that as an opportunity as well. And I think this is an area where trade PMR is also going to become increasingly important as we work to integrate that platform, particularly as financial needs become a little bit more complicated. Having a person there to help you navigate the entire thing and give a little bit more customized advice, I think will be a great complement to our suite of digital services. So over the next year, you'll see a lot more. We're attacking this problem and this huge, 100+ trillion opportunity from multiple angles. And I don't think it's on the radar of a lot of our competitors. I mean, you don't hear about people designing with the whole family in mind. And I think that's a big opportunity for us to differentiate.
Stepping back, we've been winning market share really across every category that we're in. And I think, as we execute against the vision that Vlad was sharing, we're positioned to take an outsized share of that of the wealth transfer.
All right.
See, I like that. Jason, so Vlad had the hot fudge sundae, right? He had the two scoops of ice cream, the two bananas, the hot fudge, right? Jason just came and put the whipped cream and the cherry on top, that extra 20%. He said, look, we're taking market share. So here's how I look at Robinhood. Robinhood might be the new kid on the block, but they're the new kid on the block that everybody is scared of, maybe because they didn't know this kid, or this kid looks big, or he's getting bigger, faster, stronger. Maybe he's running around their neighborhood doing pull-ups off of tree limbs and flagpoling on the stop signs. I don't know, but they're the new kid on the block that people want to not mess with. If anything, they're gonna want to join up with them because Robinhood plays no games. They are not looking to. They're taking market share from people. You better believe it.
All right. The next question I'm going to read on behalf of James Yarrow from Goldman Sachs. We are seeing tokenization across Robinhood and other firms.
That's right.
And your tokenized equities product and those of peers are not interoperable, as they are slightly differently structured and on different blockchains in many cases. Does this result in fragmentation of liquidity across the equity market? How do you expect this market to develop, and how would you make these tokenized stocks interoperable?
Yeah, I can field that one. So right now, certainly Robinhood stock tokens are not as interoperable as we would like, but that's just because they're actually not on DeFi yet. So they're very much in the Robinhood walled garden, which has certain advantages. You know, right now, every trade that a customer does is backed by a traditional equities trade in a TradFi market. And as we continue to build up the liquidity and the collection of and the supply of tokens, I think that's going to lead to actually a really great initial customer experience. Over time, I do expect greater interoperability. As you've seen with other assets in the crypto world, even if they're on other chains, the community tends to get involved and build bridges and wrappers. And so I think that that's less of a concern. I think every major tokenized asset will eventually end up being multi-chain. So it's just a question of how do we get there. But interoperability, not a huge concern. I think it will come. In terms of liquidity fragmentation, I mean that's nothing new. Especially if you look at it on a global level across all asset classes, there's multiple exchanges, there are multiple market makers involved, and this is something that they know how to deal with. Managing liquidity and trading across different venues. And I think in some ways, crypto technology and infrastructure makes that a somewhat easier problem because the cost and complexity of integration from an engineering standpoint tends to be much simpler.
All right, thank you, Vlad. The next question is for Jason, and it's from Ben Budish at Barclays. I'll read it on his behalf.
All right, hold on. We got time for one more. I'll let one more come through, and then we'll end the video.
You've called out a number of cost items impacting this year, some of which it sounds like won't recur. How should we think about the run rate into 2026?
Yeah, so we're working through planning right now for 2026, but what I would tell you is that we're approaching it the same way that we've approached the last couple of years, which is we think that we can invest for growth while delivering profitable growth, meaning margin expansion. The way that we approach that is that we ask the existing businesses to find efficiencies, and when we set targets and build our plans, we ask them to grow their cost base in the low single digits, and in some cases even lower. And we use those savings then to reinvest into growth, things like increasing spend in marketing, which we love the ROI efficiency of our marketing spend, but then also investing in new businesses. And you see the kind of outcomes that we've been able to deliver the last couple of years in terms of fast revenue growth and relatively more modest expense growth. And that's the approach that we're taking right now as we plan for 2026.
All right. Thank you, Jason. We're going to take it.
All right, folks, that is going to do it for this video, but I'm going to tell you what, I'm excited about Robinhood's trajectory. The market has really come down a lot recently. And so you can see, even in my portfolio, now here's my thing, right? It's come down quite a bit, but if you look year over year, I'm almost up double, right? I was up 230 something percent just recently, and it fell all the way down to 98. Isn't that still a win? I'll take the 98% growth. It's totally fine. The market's rigged to stay up, like earn your leisure, they always say. And look, we got plenty of buying power to buy now at low cost, right? So Robinhood was up. Let's see, year to date. All right, so look, October was the height of it, $152. They're down to 108, baby. That's a discount. Now for me, no. But do you think I'm just going to wait until it falls all the way back to $18 to buy some more? No, I'm about to bring my average cost up because I have to get some more Robinhood. It just has to happen. But all right, folks, y'all have a good one, and I will see you in the next video.